Hi, this is Sergio Castro, Chief Financial Officer of Otto Energy. Hopefully you've been enjoying these series of videos that we've been releasing every month, just trying to give you a little bit more insights into various aspects of the company. This month we wanted to talk about our stock price. I know it's very frustrating for you and for us as well, and I just want you to know that we do understand and we do acknowledge and we do see this disparity between what the stock price has currently been trading at and what its true value is. But let's put this into perspective and show you some graphics that can hopefully drive this point home. If you look at our stock price over the past 2.5 years, we actually have had quite a bit of success. I know it may not seem like it, but we've gone from 0.004 to 1.4 cents. That's an increase of over 3x. Again, I know it doesn't seem like it, but it's not too shabby. And this has really been driven by three key areas. The first is being able to increase our cash, while simultaneously, number two, being able to decrease our debt. Not a small feat. Now, we do understand that this increase in cash has been aided by an increase in prices, and that's fine, because even as prices have continued to level off, we're bringing on new production now from our new assets. So this will help cash continue to increase and hopefully continue to keep driving that stock price forward. Now let's zoom in a little bit and take a little bit more of a micro view and take a look at our stock price over the past 12 months. You can see right here, it's remained flat since November of last year to November of this year. But that's not a bad thing, because even by remaining flat, we've still outperformed the ASX 200. We've still outperformed our Australian peers. We've still outperformed the S&P 500 here in the US. So I know it may not seem like we're making any progress, but I mean, the numbers don't lie. We actually have had a little bit of success. But that's not good enough. We need to have more success. We need to continue to drive this price home. And I think this next slide will really help with that. Our market cap is currently sitting at roughly 67 million Australian dollars. When you back out our cash, when you back out our marketable securities, that leaves roughly $18 million that the market is giving us for our assets. $18 million. That is ridiculous. Look at our reserves right next door to that. Our 1P, our 2P, our 3P reserves. So we acknowledge your frustration, we see it as well, and we're trying to show this discrepancy in all our presentations and one-on-ones, and every time we get a chance to speak to investors and drive this point home. And that's just our reserves. On this next slide, you can take a look at any number of measures. Look at production, look at revenue, look at earnings, look at 1P and 2P reserves alone. That previous slide also included 3P, but we're undervalued in each and every single category. So again, I know it's frustrating, we acknowledge it, we understand it, and we are trying to remedy this by showing this discrepancy every time we get an opportunity to. Thank you very much.